Bitcoin has fallen from 69k to 36k. Should I buy, should I sell, or I should hold my Bitcoin? These are the three most asked questions by crypto folks right now. So today we'll be removing all this kind of euphoria, hopium, and panic feelings, and go straight into the chart to analyze what is actually happening in the technical aspect of Bitcoin. Secondly, we'll also take a critical look at the on-chain data to know the buying and supply forces that can influence future prices of Bitcoin. So at the end of this video, by combining these two analyses, we should be able to make high probability trades. If you are new to the channel, my name is Mama, the author of the book Future of Money and Investment that has sold over 10,000 copies worldwide. And each and every single day, I share free education and technical analysis on the forex and cryptocurrency market. So make sure you subscribe, and I'll see you in the video.
I'm all about stacking up my Bitcoin. Cash is the past, got my Bitcoin up. Cash is the past, get.
Alright, starting our analysis from the monthly time frame, we have quite an interesting price action here. The situation we're having on the monthly is a market that is holding a support of 30,000 region and a resistance at 69,000. So what we can see here is that between these two regions that I've marked out, until Bitcoin breaks above this area, we can't be expecting an all-time high, and until Bitcoin breaks below here, we can't be expecting new lows on Bitcoin. But there's another important scenario that I would like to point out. When you look at the 5-year chart on Bitcoin, that is from 2018, all this area, to 2022, the structure is giving us quite an interesting pattern. What the structure is currently giving us, it looks like something what we call an overextended W pattern. You can see it here. You see, after drawing out here, you can see clearly that it's an W, but it is overextended. But we have two. The W pattern is of two categories. We have the real W pattern, which looks like this. This is how a real W pattern looks like. It looks like this. And the W pattern, the completion zone is the neckline here. So when you see a market that has created a W pattern, you can expect it to correct to this level before making an all-time high or trying to go back to the previous high here. So when a market creates a W pattern, this is the completion zone. So a W pattern has one completion zone, but an overextended W pattern has two completion zones. Let me draw out an overextended W pattern and how it looks like for you. This is how an overextended W pattern looks like. It's a W, alright, but it has been overextended at the top. But and also an overextended W pattern has two correction zones. One level is here, and the other level is a deeper correction to the neckline. So when a market forms this overextended W pattern, you can expect that market will either correct to this level and bounce back to an all-time high, or it will correct to this level, that is a deeper correction, before going back up to the previous high. So when you see something like this, these are the two scenarios you should expect on an overextended W pattern, which Bitcoin has created for us with its 5-year time frame. So going back to our chart, this is our first area of interest, and this is our second area of interest. So between these two price levels, that is between 13,000 and 20,000, is the area we are interested in Bitcoin to come to if Bitcoin breaks below 30,000. That is the situation we are having on the monthly. But until Bitcoin breaks below 30,000, we can be expecting prices to hit this region. So let's go to our weekly time frame and see the situation we are having on the weekly time frame. Alright, going down on the weekly, we have a market that is holding a support between 30,000 to 32,000 and a resistance between 60,000 to 62,000. Let's go on the line chart. You will see it quite clear on the line chart. On the line chart, you can see that this is the area the market stopped at when it was first trying to make an all-time high, and this is the area it stalled at after the first retracement. Then the market tried to, from here, the market tried to break out from this area and came all the way to 69,000 around this region, but failed again and melted down all the way to this region. Let's go back to our candlesticks. So from here, you can see that this region here you are seeing, most people would have traded it as a breakout, but it was actually a false breakout. So mostly what a false breakout will always do, it will try to grab some liquidity. When you look at here, this week here, there are what stop losses be above this week. So what the market is trying to do, market will go back. Stop losses is like an intention to buy or an intention to get into a trade. So when someone goes short on the market and put a stop loss above it, the market will come back to that level, take all those stop losses, and also trap the breakout traders around that. They will also think the market has broken, and then after that you see a very big candle closing below the area again, and what will follow will be a meltdown. So after the meltdown, you will see that the market will also try to go back to that same region around here to grab the liquidity again before melting down again. And after doing that, you see that the market will be forming what we call a head and shoulder. This will be a shoulder, this will be a head, and this will be another shoulder. Let me show you how head and shoulders are formed. Head and shoulder is like nothing but simply a fake breakout. This is how head and shoulders are formed. You have something like this, a horizontal level that the market will be respecting. You have a horizontal level like this. Then the market will make a move that will look like this. Then the market will be coming from the bottom. First, it will come to the level, reject the level, come here, then try to break above the level. Then another move it will do is it will come back and close below the level and go back to grab same liquidity at the level before melting all the way down. So from here you can see that head and shoulders is nothing but simply a fake breakout. So let's go back to our analysis and see what is happening, as I've shown you how head and shoulders are formed. So from here, in the medium term, we expect that Bitcoin will come back to 60,000 region before seeing this place. So this is what we expect. In the medium term, we expect Bitcoin to come back to this region, and in the long term, we expect Bitcoin to come to this region. But there's one scenario that might be preventing Bitcoin from going here at the moment. There's a region here I would like to show you. There's a resistance here I would like to show you. Here there's a resistance there, so until the market breaks above it, we can't actually confirm that the market will be coming here at the moment. But in the medium term, we expect the market to go there. So let's go down on the daily and see the situation we're having on the daily time frame. Just a quick thing, if you enjoy the content of this video, make sure you leave a like and let me know in the comment section your favorite cryptocurrency your favorite forex pair, and other topics you would like me to discuss in my next video. Don't also forget to subscribe and click the notification bell so that you don't miss on the video when I upload it. Alright, going to our daily time frame, the situation is quite clear when you zoom out the chart. So zoom on the chart, you can see the head and shoulder pattern very clear, and it's playing out very well at the moment. So until the market breaks above 60k, this head and shoulder pattern remains valid. So we need the market to break above 60k. As the market is coming here, we need it to break above 60k before this pattern can be invalidated. So that is what we need to keep an eye on. But also, by coming to 60k, there are two regions that we need to clear before. This is one region that we need to clear. We need to clear this region first. We need to clear the 40,000 region. The market broke and closed below 40,000, and it's retesting it from below. So around this region here, we have a resistance. So from here, we can see that the market might melt down all the way to here in the short term. That is maybe in the next few weeks or something like that. The market might melt down to hitting 30,000 before backing up to where the 60,000 region we are talking about. Or another thing we can expect is if the market breaks and close here, we can be expecting a retest. Then on a retest, the market will then go all the way here. So in the in the short term, from this price action here, we are at a very decisive point where we can expect the market to melt down here or break above retest and take another move up. So this is our overall target. This is our overall target we are expecting the market to do. This is the overall move we are expecting from the market. We expect the market to do something like this, but it might not happen in the very short time. Maybe it will play out in several months, maybe 6 months to 1 year time, that this might even play out. So it is not something you should expect to happen so soon. So let's go to our on-chain data and see what is happening, how people are moving Bitcoin in and out of exchanges. All right, looking at the on-chain data we are having, that is measuring the net flow of Bitcoin on exchanges. This green area here is telling you that there is positive flow, and here there is negative. That is like here is like a surplus, and here is a shortage. So during 2013, where is 2010? During 2013 bear market, that is the first bear market we had in 2013, you could see that people were depositing Bitcoin on exchanges more than they were withdrawing from exchange. So you could see this massive green here. And when you come to 2017, that was another bull run year. You could see that people were withdrawing Bitcoin from exchanges. You could see all this red. That means there were shortages of Bitcoin on exchanges. So when there's shortage in the market, price goes up. And after 2017, 2018 to 2019, you could see that there was another bear market. And when you come to 2018 there, you could see that there were so much Bitcoin on exchange. That means people were sending their Bitcoin to exchanges, selling more than people were buying out and withdrawing from exchanges. And when you come to 2021 too, you could see this massive, and this one graph is even bigger than what we had previously. You could see a massive shortage of Bitcoin on exchanges during the 2021 bull run we just experienced. So currently, we are currently having shortage of Bitcoin on exchanges, as we so expect prices to go up, which confluence with this our area here, with our interest in price coming. So expect price to go up at the moment. But as price gets to this level, we'll be monitoring the net flow to see whether it will turn a surplus of Bitcoin on exchange. If it turns surplus and we see that there were people are now depositing Bitcoin on exchanges as our price gets here, that is additional confirmation that what we are expecting in the long term for Bitcoin to come all the way here will actually happen. So let's sit down tight and monitor what will happen on Bitcoin.